Economists warn that the U.S. economy is overheating. What does that mean to you? Hi, I'm Dave Lopez, founder and managing member of ILG Financial.
And I'm Chase Lopez, advisor at ILG Financial. And this is another episode of Retire Your Way with ILG Financial, where we talk all things retirement planning. Now, Dave, before we get started, just want to let everyone know to go ahead and hit that like and subscribe button down below. That way you can get alerted for all future videos that we put out.
Yeah, thank you, Chase. So the economy, the economists are saying that the economy's on the verge of, if not already in this effect of overheating. Mm-hmm. What we want to talk about today is what does that mean for you, the listener, and what can we do about it? So we're going to really break it down today. We're going to talk about what does it mean for the economy to be overheating. We're going to talk about government fixes, traditional government fixes for an overheating economy. And just as importantly, with a fix, what are going to be the consequences of that fix? Sure. Right? We'll talk about what those are. And then the big takeaway always is, what does that mean for you? So you always want to focus on how does this impact you and what you can do about it. That's what today's YouTube is going to be about.
Yeah, so let's dive right in, Dave. The economy is overheating. What exactly does that mean? Well, the biggest thing that it means for folks is we see a rise in prices, or inflation is the common term that we see on the news and things like that. That means gas is more expensive. We've certainly seen that. That means food is more expensive. When you go to the grocery store, it's more expensive to buy groceries. So really, all of this feeling, right, is really causing a crunch in a lot of people's daily budgets, daily expenses.
Yeah, it's really burning a hole in our wallets.
That's right.
Everybody's seeing it.
That's right.
And anybody who's gone to the grocery store, another term, interestingly, that came up, we were talking about, if you haven't heard it, you're going to start hearing more of it. It's the term shrinkflation. If you haven't heard about that, what it means is what the grocery stores are doing so they don't have to raise in prices too much, is they raise prices a little bit, but then they shrink the size of the package. And almost everybody we've talked to has noticed that. So you're reducing the price by maybe the cost goes up like 30%, but it might be a 10% increase in price and a 10 or 20% decrease in the size of the product.
That's right. And the relationship between the economy overheating and that inflation story that we're telling there is really just the simple fact of there's more people buying more goods, and that's causing the price of goods or services to go up, right?
Yeah, well said. That's the simplest way to explain inflation. It's supply and demand.
That's right.
More people are able to buy. We'll talk about why that is. If more people are buyers than sellers, then prices go up.
They have to, right? It's just kind of the natural order of things.
Yeah. Now, and here's the numbers. Let me jump in on that, because here's kind of for folks that are meat and potatoes on the numbers. According to Moody's, did some analytics on this. About $709 more a month the average American spent in July compared to 2 years ago in July.
Man.
Right? Harvard's Joint Center for Housing Studies said 1/3 of Americans, get that, 1/3 of Americans right now are spending over 30% of their income on housing as of 2021. And it's probably a little higher now, but that's as of 2021. Soup prices are 30% higher than they were before COVID. 30%.
It's incredible. It really is incredible. And we see this every day when we go to the grocery store, whether you're renting or you bought your home, right? You're seeing this, rise in prices.
Yep.
So how does the government go about fixing this issue? We clearly have an issue, right?
We do.
How does the government kind of go about cooling down this overheating economy?
Well, the big picture, Chase, is it's going to require pain. Yeah. There's no easy way out of it. The fixes will all result in pain. So you're going to hear some very complicated terms, right, in the media. We'll talk about those today.
Yeah.
But they talk about things like an outright decline in economic activity or a mild recession. That's code. We're going to kind of talk about what that is so that people know what is actually being said. The Fed, thankfully, I would say, has been very transparent about what they're trying to do by raising interest rates. Remember, the Federal Reserve, their only tool to fight inflation they have is interest rates. So they want to raise interest rates to try to control inflation. But it really begs the question, how does raising interest rates control inflation?
Yeah, and they've really been, to your point, the transparency point, Dave. If every month or every few months, they will literally go on TV and they will say things like, we need to slow down the economy,
Yeah.
right? Which is code for.
Yeah, slow down the economy is code for people are going to have to lose their jobs.
That's right, right? And
which results in less spending.
That's right? They want more people to spend less money on things, whether that be goods, services, whatever kind of the case may be, because that's how they're going to bring down this inflation issue that we're seeing, right? Yeah. Some other things, and I wrote these down the last time that they were speaking, just so we could kind of talk about it here on the YouTube channel. One of the terms that they'll use is soft landing, which is a lot like threading a needle, isn't it?
That's right. Very hard to do.
Mm-hmm.
What they're trying to do is slow the economy down, but not slow it down too much so they overshoot the landing. Right. It's not only very difficult to do; it's near impossible. Anyone who's ever tried to park a boat understands that. You slow the boat down or even stop it; it keeps going. So trying to get that right balance is very difficult. But even a slow landing. Mm-hmm. Soft landing is meaning slowing down the economy.
That's right.
Which is code for less buyers, which is code for people have to have less money.
Yeah.
You have to have less money because you've lost your job or because you're getting less government stimulus or both.
Right. And by definition, if the economy is slowing, right, and people are losing jobs, by definition, that is a recession.
That's the definition of a recession.
They don't want to say the R word, right? But that's really what the only way to accomplish this lower inflation.
Yeah, so the way we see it, the way you address inflation is you need to create a recession. Your goal is just to create one that is not super devastating and it doesn't slip into a depression or a major recession. That's a soft landing. What's that last one you said? I love the one you found.
Yeah, so another one that they'll say is they want to create slack in the labor market. Create slack in the labor market. So
how do you do that?
Yeah, it's very telling, right? It's, hey, we need unemployment to go up, right? Which means we need people to lose their jobs so they don't spend money on goods and services to bring down inflation. It's all kind of interconnected there. They just do a very good job of using very nice terms, right?
Yeah, they sound technical as opposed to painful.
That's
right. But the result is they need folks to lose jobs so that the inflation will go down.
Right.
And that is going to be painful, right?
And it's already happening, really. We've seen it in the news, and it's not just low-paying jobs. A lot of people think, well, if the unemployment goes up, that's just on the lower wage scale, right? It's actually happening across the board. You may have seen, articles about technology companies that are laying off people that have, six-figure jobs right now.
It's already starting.
They're trying to create that slack in the labor market, right?
Yeah. So there's the pain I talked about. If to get a handle of this inflation, there's got to be some pain. Painful but necessary, I would suggest, right? Because you have to take care of it. Understand the normal economic cycle is a cycle of expansion and contraction, kind of like high tide and low tide is the normal tides that we have when we go to the beach.
That's right.
You can't just always have high tide, and you can't artificially create high tide without having repercussions.
That's right.
Well, over the last several years, our government, through spending and stimulus, there's all kind of code words you'll use for it. Government stimulus means spending. Spending, giving money to people, you've artificially created high tide or economic expansion. And we've expanded too long without a recession or without a contraction.
Right.
And we're overdue for an economic contraction, a normal part of the economic cycle.
That's right. And again, all of this is in service of the one goal, which is bringing down the inflation problem that we've been really dealing with, over the past, 12 months or so. So whenever you hear the word, mild recession, right? That's a lot of people will think that's kind of an oxymoron, right? Those two terms can't really work in concert. So it's not necessarily mild if you're one of those people that ends up losing their job, right? Or it's your child that ends up losing their job. That's not mild to them. Right?
Yeah. So a recession, notice, is very personal.
Yes.
We can talk globally or even as a nation, we're in a mild recession. It's a depression for someone who lost their job.
That's right.
And for someone who's on a fixed income that didn't change, you may not even notice a recession.
That's right. So with all that said, right, what are some fixes, at least at the government level, that we can make, that the government can make, that is, to address some of these things.
Yeah, well, interestingly, we are, as of filming this, we're at about the 1 year anniversary of the administration's, what did they call it, Chase? Inflation Reduction Act. We're
That's
a
right.
year into the Inflation Reduction Act. And ironically, and I say that based on the name of it,
Sure.
ironically, economists argue that the fiscal stimulus that resulted, remember, fiscal stimulus is code for government spending, right? And government giving money to the public, right? So they have money to spend. The fiscal stimulus has actually been counterproductive to this goal of reducing inflation, as you might guess from what we just said before. If more people have more money, more people can spend. If more people can spend, prices go up. So it's been counterproductive to what the Fed's trying to do. So imagine two parts of the government fighting each other. The Fed's trying to create a recession by having job loss and lowering inflation, and the administration's policies are pumping money into the economy and giving money and businesses money that are continuing to fuel higher inflation.
That's right, and it's they're not working in concert, right? They're not working together to make those things happen. And one thing, and I don't know if we led the video with this, but one thing about inflation that I think a lot of people should know is when you see on TV that we've seen this recently, inflation is going down, right? It was at, I don't know, 9% a year ago. It's now at 4%. Well, don't misunderstand what they're saying. That doesn't mean prices are going down. That means that prices are still going up, but just not at the same speed. So going back to that original point that you made about the soup being 30% higher as far as the price goes, this is affecting, everyone, right?
Everybody.
And it's continuing to affect people unless we kind of get a handle on this.
Yeah, so go back to this idea of what does the government need to do? So the government needs to, and you used a great term there, I hope we all got that, about we have to get on the same page between the Fed and the administration and the Congress, right? They got to be going in the same direction, and right now they're not. And this is going to result in, we need a course change at a governmental level, so everyone's going in the same direction, and that's going to be painful. Right? Because if they stop giving government stimulus, we will probably lower inflation, but people are going to lose some giveaways. And you're seeing that now with things like, you've heard about the Medicare running out for the temporary COVID,
that's right.
What would you call it? Extra Medicare allowances, and that's going to be cut off and things like that.
The student loans, stopping the student loans.
Yeah, so things like that are going to cause pain, but it's got to be more than just those two things. It's got to be kind of across the board, I would suggest. We need less government spending, right? We got to be reducing the deficits that we're doing. So we need to have a sustained period of low inflation that will get us back on the right track. What else do we need? We need to...
And I think those two really work together, right?
They do work together.
If the government is spending less money, meaning they're not pushing more money into the public, right? Well, then by definition, people will have less to spend, and then inflation will go down. So it all works kind of together. But unfortunately, at least at this moment, these things aren't working together. So that's really a push that we need to see from the government, right?
Yeah, and for folks that are listening, the big decision you've got to make is, do you think that the government's going to do this? If they don't do a course change, the problem's going to continue to be exacerbated until we have a kind of the result is a plane crash, basically, as far as an economic level. Then you start to go into a deep recession, maybe even a depression, because the whole thing kind of implodes.
Yeah, no, I agree. And okay, so we talked about why overheating creates the inflation problem we have, right? We talked about maybe some government fixes that could be implemented. But to your original point at the top of the video, we want to know how, or the folks that are listening want to know, how is it going to affect them? How does all of these confluence of events affect them, whether they be, in retirement or approaching retirement?
Yeah, so let's dig right into it. Inflation, if we continue to have it, as you all know, eats into your buying power, right, or your income. The same income you're getting will buy less goods, right? So if you were meeting your budget needs before, maybe now you'll need an extra $200 a month. So that's a reality we want to address in your retirement plan.
That's right.
Right? Recession, if we have a recession or a slowdown that kind of gets the handle on inflation, that'll be good for your budget, right? But it's not good if we have a recession. Often that results in a market correction.
Right.
So what you want to do is be very cognizant. You want to be very aware of the money that you're pulling out and using for income. If it's tied to investments that are in the market, you could have a big problem. And if you
That's
want
right.
more information on that, look for our podcast below or our YouTube short on sequence of return risks.
Right.
It explains how a volatile stock market, when you're pulling money out in retirement, can be a huge time bomb for you in your retirement plan. So check that out. Right?
That's right. And if we're expecting a recession, right, a lot of folks need to know, hey, we want to buckle down a little bit here and watch our spending, right? We want to make sure that our needs are kind of being met, right? But everything in excess of that, we just want to be, aware of those things, aware of our monthly budget or monthly expenses.
Perfect. So listen, let's wrap it up.
Mm-hmm.
So what do? You want to review your income streams
Mm-hmm.
and your investment strategies with your financial advisor.
Yep.
Right? Specifically, where's your income coming from? You want as much of it coming from guaranteed sources and as little of it coming from volatile sources like up and down stock market exposure. Doesn't mean we don't want to be in the market, but we really don't want to be in the market with money that we're relying on for income, regardless of how the market performs. And you want to address that with your financial advisor. You also want to have built into your comprehensive retirement plan some hedge for inflation if we continue to have inflation. So again, get with your financial advisor, talk to them about how their plan that they've designed for you addresses inflation hedge and will kind of mitigate that risk for you if that's the future.
Yeah, I think it was a great talk today. I know this inflation topic is a big topic for a lot of folks.
Sure is.
So go ahead and hit the like and subscribe button down below, and we'll talk to you next time.
Talk to you soon.